afternoon, everyone. It is Angela and
Reggie Green.
And we're out here and we're just talking about different loan types today, different questions that come up. I mean, in Arizona, everyone's looking to build, looking to expand. So we have a different loan product out here, and it's a construction loan. So those loans are a little different. It's not something that you would just go into and find easily. You definitely have to work with people that know how to use this product and know what to expect. Reggie right here has been great, and Reggie has some different information on this product, including how to purchase the land with it, and do you have to have utilities on this land, and what you need to get done, and how much money do you need down, and all the fun stuff on a construction loan. So Reggie, what are some of the details that you need to be aware about when you are getting ready to purchase land or getting ready to start the process on building your own custom home?
Yeah, so there's two types of construction loans. The first type is, let's say you already own a piece of land and you want to build a house on it. That's one construction loan. And then there's a construction loan where you're actually buying the land with the plan to build on it.
Okay.
So
yes.
we can do either or. So if you identify a piece of land, what we do with the construction loan is we have a builder put together plans of how much it's going to cost to build the house that you want to build. We also are going to include the land price in that. And then you basically have to come up with 10% down. You have the land cost, the build cost. We're going to be able to finance 90% of that, so you have to bring 10% of your own money in.
Oh, that ain't so bad then.
Yeah.
So I want to purchase a piece of land. I want to build a custom home. He's a one-source deal right here for all of that.
Yep.
I've worked with lenders before where they're like, hey, you need to get the land first and come back and see us. So it's great to know that you can just get all of it done at once, because there are a lot of details that go into building from the ground up, including utilities. So most times people are like, I'm going to build a house, I'm going to buy this land, it's going to be cheaper, but they don't think about the sewer. Does it need septic or sewer, water lines, electricity, all those fun utilities? And it can cost, depending on where you're located, it can cost a pretty penny.
Oh yeah.
So I mean, I've seen it where it's 100 to 200,000 just to get those utilities put in. So it's great to know that Reggie has a product that you could get the land, get the utilities done, and get the build all done in one loan, instead of trying to put cash down and do it in many different avenues where it gets kind of stressful and it can take a lot longer.
Absolutely.
Reggie, how long do these loans typically take about when you, from start to finish? What do you average? What do you see to build a custom home?
I usually will to build or do the loan.
All of it.
Okay,
the whole
cool.
shebang.
So to do the loan, I would typically recommend 45 to 60 days. And
Okay.
the loan part isn't the hard part, it's the build part. So
Yes.
you have to get the build plan, and you have to approve the builder or the contractor that's building the house. And that can take some time, because what they do is they review all the plans of the build, and then you also create a draw schedule of when the builder's getting money and what has to happen for them to get certain money. So on the loan part, 45 to 60 days, what happens is if you're buying land, when the loan closes, the person that's selling you the land is going to get their funds for that.
Okay.
And then the big thing to know is if you're working with a contractor and a builder, the draws that are paid to the builder to build the house, they're paid on as work completed or as costs are completed. And here's where this is important to know. When they start construction, let's say they need $100,000 to do a certain period of the construction, the builder is going to have to front that money, because the draw happens once they complete the work. Okay, so if you have a contractor or a builder that doesn't have those funds to do that, then you have to do that. So it's important to do that. We're not giving them a draw to start, we're paying them to finish on the draws. Does that make sense?
Yeah, and it kind of protects you too. So I mean, for me personally, I've seen some crap shows out there.
Yeah.
So you definitely don't ever want to give a contractor, even though they're great and you've worked with them before, you don't want to give them all that money up front, So you want to be really careful when it comes to that. So yes, giving half up front, giving 25%, just make sure communication is known, that they'll get the full payment when that part of the job is done. And again, I think that's great that the lenders are helping protect you too as a consumer, because there's timelines and there's guidelines, and there's going to be different obstacles that you just don't want prolonged because the contractor didn't show up because they got paid in full. So I think that's great. I think that's a great option right there.
Yeah, and typically the build process for a regular conventional sized loan, 9 to 12 months is what they're looking for. If it's a jumbo loan, which means you probably have a little bit more of a big build, they'll go 12 to 24 months from the typical time period for those.
And a jumbo loan, a little refresher right there, what would that price point be starting at?
So the actual loan amount's over 768,000. So above that is jumbo, below that's conventional.
Okay, and then for our normal consumers out there that don't know the lingo of the lenders, what would be a better aspect to go jumbo over conventional? Okay, we'll bleep that out because you can't go jumbo or conventional because jumbo is just a higher loan limit, right?
Well, you'd have to bring more money down. So you might fit in that category where you could go either depending on if you have the down payment.
Okay, ready? And so jumbo to conventional, you may have the means to do it either way. And if you decided to go conventional over jumbo, what would be the positives and negatives, and what would that look like for down payments and all that fun stuff?
Yeah, great question. So let's just kind of do a hypothetical scenario. So let's say you're buying $1 million property. If you want to go conventional, you're going to have to bring it down to that conventional loan limit. So for example, if you wanted to put 20% down, $800,000 loan amount is above the conventional loan limit right now, so you'd have to do a jumbo loan. So here, we have creative options. Even we could do a first and a second in a conventional loan limit. The thing about conventional loans, they're typically a little easier to qualify for and a little less stringent on the guidelines to qualify for them. So I'll give you an example. When you do a jumbo loan, you usually need cash reserves. What cash reserves are, after you bring the money to the table for the down payment, do you have money in savings or a liquid account where if something were to happen, you could still make the mortgage payment? Conventional loans typically don't require that. So we go over all the options with you, and maybe jumbo and conventional is not an option for you, but if it is, we show you the pros and cons of each and you pick. But a lot of times jumbo loans actually have better rates, but they're a little bit harder to qualify for. So we're gonna go over all that stuff, and obviously our goal at the end of the day, we want you to find, get the best product for you and your family's goals.
Very cool, very cool. That is some very cool, very cool. That is some interesting information right there.
I think that's probably good.
Did we cover it all?
Yeah.
Awesome. If you have more questions and want to build a custom dream home, you know what to do. Contact Mr.
Reggie Green
or Angela Dansero.